What is a financial model? So we have a first question: what is a financial model? Why would someone make a financial model? So in developing a financial model, you summarize different technical and economical factors to arrive at a number, arrive at a target, which is the value per share, IRR of a project, net present value. So I'm sure you guys must be aware about what is a value and what is IRR, what is NPV. But what does a model help you do? It works like a calculator. Like in a calculator, you do calculations, you input, and then you get an output. Similarly, a financial model functions. So you have a set of inputs which impact any company's profitability and its cash flows, and with different factors which are impacting its valuation or future profitability. So those factors we try to in a financial model, you try to ascertain all those variables as an assumption. So for example, if there's a company which has a debt of or a loan of 100 million rupees and interest rates are 10%, so that company for the year will pay interest expense in the finance cost of 10 million. So if interest rates in the economy increase by, let's say, 200 basis points, which is 2%, so uh, your impact or your finance cost would increase by 20%. So effectively, you will pay 2 million more on that 100 million of debt. So all those assumptions have to be set out in a model, so that whenever you change those assumptions, you get to see what impact or what end result would have, and how will that impact valuation of the business. So what should a model include? A good financial model should be simple, so anyone who is using that model can understand the model. It should focus on key profitability drivers. For example, a company, if I have a chemical company, which is a small company, and its profitability is determined by what is the landed price of that product, and at what price are you able to sell to your customer. So that profitable, so pricing of the product is important, demand of that product is important, volumes are important. So those kind of, so key profitability fact drivers should be very well known. Some of the businesses are also immune to these factors, so one should have that in mind also. For example, like power business in Pakistan, it has no link to the dispatch, because you have a single customer, government is your buyer, and you sell to that customer. You just have to make capacity available. Whatever fuel cost, it will be borne by the government. So effectively, your key profitability driver is the government's capacity to pay, or your cash flows of the business based on which you will have the returns. You have to clearly convey your assumptions and conclusions. So for example, if I am assuming that a company will sell product at X price, so that should be very clear on what my selling price assumption is. Is it an MRP? Is it an X factory? So those assumptions have to be very clear on what are my assumptions and what conclusions I'm getting. So for example, if I'm assuming for if I'm doing a valuation of a cement company, and for future my uh, for my next year's profitability, my cement price assumption is 700 rupees. So I need to be very clear on whether that's out of that 700 rupees, how much is going to company's pockets. So one can do a working that, okay, this much amount is will be borne by the company, and this much amount will be kept by the what you can say dealer, and this much amount would be paid in the form of general sales tax. There's FED. So all of that has to be stated very clearly whenever you are making a model and pitching to your clients or making conclusions for your investments. You can you need to evaluate risks through sensitivity analysis, break-even analysis, and scenario analysis. For example, these days we are facing currency depreciation, which is going higher. So, or if you are analyzing a financial company, so you have a lot of employees and you need a decent amount of business to sustain. So you need to see the risk factors as well. So what if demand falters by 20%? So what if industry overall shrinks by 20%? For example, if you are analyzing a textile business, they are selling lawn locally. So in an inflationary environment, people may not spend on clothing, on fashion, as much as they're spending on necessary goods, because obviously you would have food comes first, or physiological needs come first, education, health, those expenditures come first in any consumer's mind. So you need to see that how bigger the risk is, what kind of scenario you have to analyze. You need to see what level, at what volume do you break even. So for example, if a company, if you are investing in a company, and that company's break even is 30% below your current volumetric assumptions, that means you have a very small cushion. So you have to be well above your break even point when you are evaluating the company. There are alternative models, so you need to see how to check. So there's no just not just DCF you do in a model. You can do other calculations as well. So for example, if you are working on a PE analysis, which is a relative, or you are just calculating overall return on the model, so you can also do calculations of for portfolio simulations on the models. So financial model is not just you just take a company and do DCF and do valuation. You can use a model to to calculate return for your portfolio or other purposes also. So EV cost is also very important. So for example, if I'm doing valuation of a cement plant, so one aspect is that I calculate TCF of its future earnings and cash flows. Another way of looking at it is I just simply calculate what is enterprise value. So what is an enterprise value? It's basically market value of your debt and market value of your equity. So when I add that up, I get the firm value. So at what, if I'm getting a company which is cheaper on so if I want to put up a cement plant, and today it costs, let's say, $60 a ton, and in market I have stocks available at, let's say, $30 a ton, so it should be cheaper. So that is also a way of looking at building a financial model. So you calculate enterprise values also through using your model. So this is deterministic is basically the broad financial model. Sorry, just to come back on the previous slide, I just missed one point. I think I should mention that completely. So these assumptions and the way I was working on the valuation, it's not just about the listed companies in the market. So it works around all of the businesses that you are doing valuation on. You can do valuation of a private company, you can do valuation of a project as well. So if you are working in a conglomerate and you get a company to do, if you get a business proposal of a new project where you have to calculate what is the valuation of that project, what the NPV. So if I raise funding on 15%, if my cost of equity or my hurdle rate is 15%, what is the NPV that I'm creating out of that? So you make the model in a similar manner. You create a new asset, you create a new investment, and then you forecast balance sheet on how that business model will turn out, how will the income statement look like, how will the balance sheet look like, and what will be the cash flows. So I worked in a power project, so we used to focus a lot on IRR and NPV. So in an IRR model, so you work in the similar pattern. The skill set is the same, which you learn through this research challenge process. You make a financial model and you try to learn how to make cash flows, and based on that valuation, you can you this skill is transferable to is its utility is in many aspects of the business in the financial industry. Just I wanted to highlight this part, so I thought I should come back. So now we are here to discuss what are the key steps to make a financial model. So you need to first see historic income statement and balance sheet, because that is how that will be the basis on how you forecast how the company is going to behave in the future, what sort of macros help the company, what sort of macro environment is not good for the company. For example, just to give as an example, if economy is booming, construction sector does very well, auto sector does very well, pharma sector is not impacted by macro environment, barring just currency depreciation, because current if raw material, most of the raw material of pharmaceutical business is imported, so in Pakistan at least. So these are the kind of factors that you need to understand and analyze based on historically. You also see that if in an year, one of the companies, like for example Searle Pharma, they incurred loss in a year where where currency depreciated by a bigger margin. So you need to, so this relationship, whenever you analyze historic statements, then only you are able to look into the future in a better way. So history just gives you a bit of starting point on how things will look in future. For a new project, for if you are conceptualizing a new project, then obviously this history is not available. So you just try to look at comparable businesses, or you can also look at in the, for example, if I'm doing a completely new venture in Pakistan, I may look at business financials of the same business in some other regional economies on how businesses operate there, just as an example. I'll give you one more example. In Engro, when I used to work at Engro, there was a rice business. So I had to analyze rice. So we went to India. In India, there are US Indian rice exporters are listed. So, and Matco Foods was at that time, Matco Foods was not listed. So it gave us a good idea on how margins operate, on how the business works. So you input base year data, and then you input your assumptions and calculation section of the worksheet. You compute historical ratios, and accordingly it gives you an idea of how your future ratios look like. For example, if a company has not paid out any dividends in the past, your future payouts cannot be very high, or you have to, if you are raising that, if it should be very clearly stated on why that payout ratio is increasing. Maybe the company is getting more cash flows, maybe the company is doing better. And you should also have what you can say, reconciliation of different accounting heads, like movement statements, capex, minority interest. So these kind of movements should be well in line. So this is just a brief on what are the main drivers of revenues, or what kind of inputs you would need when you are making a financial model. So value drivers are obvious. So you need price and quantity. So if I am doing a manufacturing business, I would need what is the price of the product and what is the quantity of the product. So for example, this gets trickier if your business model does not is a different kind of setup. For example, if I'm operating in a brokerage environment, so then your stock market volumes traded at stock market exchange are the total volumes. That's the total market. And then volumes traded in my house, in my brokerage house, is the volume that I have. And the commission structure is basically based on value traded. So how do you incorporate that? So currently, minimum commission that a broker will charge is 0.15%. So that is generally the way to calculate revenue. So you need to you get the volumes, and you get the price, and you multiply that, and you get the revenue part of your so the if these two are documented very well in a model, then you can basically estimate revenues very nicely. If it gets trickier as the company has multiple products. If a company has, let's say, 10 products, then you'll need quantities of all those 10 products, you'll need prices of all those 10 products, and then you'll need to model revenues product wise, and then you add that up, and that will be the company's total revenue. So these kind of things are very important when you are uh, whenever you are making a model. This is a very key component, I should say. uh, then there are operating expenses. So you need to understand what kind of expenses are there, which expenses are fixed, which are fixed in nature, which expenses are variable in nature. So if a broker is operating, so at every trade they need to pay some amount to PSX, so that's revenue of PSX. And they also pay to the government in the form of different taxes. So those are variable expenses. They're fixed expenses like salaries and other stuff. So one needs to understand the business. So in a manufacturing concern, your fixed expenses are the salaries that you give out to the management and to other employees. Your utility bills also have a fixed and variable part. Your other miscellaneous expenses are fixed, and you have variable expenses which are linked to product. So whenever my product sales increases, number of products sales increases, my expenses, that expense increase. So capex, I think company has to you whenever you're building a financial model, you need to understand what is the cost. So for example, I'll give you an example of Lotte Chemical. It's a chemical company, and to put up a plant, you need at least $500 million. So, and that company is it's a large scale business. So you know this capacity, but since demand is not increasing much, this company will not be incurring major capex. So this is how you generally, in a normal spinning mill, you can assume that every 2 years, 3 years, they will be adding more and more capacities, because you need to upgrade technology, and your demand is also increasing. And since you are ex- exporting, your markets are improving, in Pakistan is focusing on export. So this is how, for every business, you need to understand what are the main drivers of the business. Then you compare it to history. Obviously, you evaluate economics. Sometimes evaluating economics is very important when you are making a model. Sometimes scenarios change as well. So for example, a business has been generating tons of money in the past. It may not generate good amount of money in the future because of technology change, because of demand shift, or because of alternate product available. For example, like 25 years down the road, we may not have the cars that we are operating today, but today we have a good demand. So you need to incorporate that part, that okay, this is how the businesses are changing, and this is how the businesses go bust or businesses cease to exist also. So you need to evaluate economics on what is the cost of operating a business, what is the product demand look like, how does the innovation can disrupt. So this is the very important, which you need to have. These are the very essential checklist kind of things which you need to have whenever you are making a model. There are typical inputs that you would need whenever you are making financial model. So you need to you get the data from working sheet, revenues, OPEX. Working capital is important. Working capital gives you a clue on how the company is doing and how its future working capital needs would operate. So if I am new in the business, I will need to inject money in working capital. For example, I'll give you a brief example. So for working capital, I'll give you guys a clue that retail footprint or retail penetration matters the most, or your bargaining power of the seller matters the more in working capital. So for example, if I am like if you guys buy a car, if anyone in Pakistan buys a car, you pay upfront to the company, so you fund their working capital because the demand is high and supply is less. Similar way, a retailer will have a negative working capital cycle, so he will sell first and then pay to his supplier. So you get your cash and you have a payable outstanding. So the more and more business you do, the more and more working capital cash flows you have. And you have depreciation expense, which is obviously relative to your fixed asset size. Interest rates, as I discussed, that interest rate assumption is important, and these are interlinked also. So you need to understand the complete business model. For example, if a company is expanding its sales and currently working capital cycle is positive, more and more sales growth you get, more and more working capital needs will be created, and so you will need to fund that working capital. You will need more debt, maybe either short term or long term, or you may also go for equity. Sometimes companies also raise equity for working capital. And obviously for debt is also raised for different expenditures. So if a company is expanding, you need to work around that. Also, debt maturity is important, payout ratio is important, income tax rate, it's a very important part, because if your business is local denominated, your tax rates will be very high. If your business is internationally skewed towards international operations, you would have more and more lesser and lesser taxes and more dollar revenue. So this is how businesses have to be analyzed. This is just a sample dashboard. This is a company, and how you this is a bank's model. So a bank's model, dividend discount model, and we've captured that. Okay, the company will give out dividends over the next 7 years. Then you have a book value, and then based on that book value, you calculate terminal value, and at that price, this is the valuation that you get. On the left, you have how much growth in deposits, what's the ADR you were taking, what's the risk-free rate you were taking. So these are the basic assumptions that one can have, and by playing through these key drivers, these valuations change, your capital ratio change, and your company's the value that you ask for changes as well. These are the brief Excel shortcuts I have added. So one thing I would reiterate to everyone of you, like I would say first time now, and I would reiterate again, that learning Microsoft Excel is very important when you're pursuing career in financial markets. Your and Excel, it's the master of Excel is in when you are using just by keyboard. If you're more hands-on via Excel through keyboard, it helps a lot. It helps you speed up the process. You can work in a very what you can say, your output matters. So when you are new to work, after this you guys are done with research challenge also, and whenever you're new to work, uh, so your Excel output, how fast you can produce output in Excel will contribute to overall growth of your pace. Because I honestly recall when initial days I used to be excited about learning Excel, so that helped me a lot in doing the tasks faster. And because my output was fast, I was able to do make more and more models earlier, and more models you make, it's just like mathematics. You practice more and you learn more, you practice more and you learn more. So the Excel part is also like that. This is just data selection, data navigation, page up, page down. You move to different sheets, control shift spacebar. These are most used used what you can say shortcuts. Shift control 0, control 9. This is also used frequently. And you can control arrow keys, shift arrow keys, these are important. So these you use very frequently. Control plus minus, this is very important, which you use. There's data manipulation, you cut, copy, paste. Ideally I would just encourage everyone to be hands-on on the Excel part. Auditing, okay, model auditing is very important. Whenever you get models or from other participants or from other colleagues, you need to understand how to audit a model, how to move in the model. So you press control and curly brackets, you can go back to what place it was, and then you can press F5 and enter, so you come back to the same place. So this is what generally is. So these are other shortcuts. So now you can self-learn shortcuts as well. Like I'll just put up Excel. I've just switched off screen sharing. So this is an Excel. I think I hope everyone is can see that. I would like to see something in the chat window. If you guys can see an Excel file. Okay, okay. So so maybe I can just show you guys how these things. So this is a model of a listed company, Lotte Chemicals. This is just an exchange rate assumption. This is an interest rate assumption. This is the production that I'm assuming that this company will be making. This is a change in product. This is just calculated on what's the number utilization of the company. What is the company's capacity and what is the utilization? Is a primary margin assumption, realized margin assumptions, and based on that, I get EBITDA and earnings of the company. And this is my target price. So most of the calculations are at the back in the model in this section, and the basic dashboard where I can see, okay, if I have $90 margin, so EBITDA is 3.7 and earnings is 1.9. If I change this assumption to 100, so I can see the change. So earnings increase. If I make it 80, earnings reduce. So this is how the model is operating. So this is how dashboard looks. So I can show you how this control and this bracket works. This is EBITDA. So I pressed control and I pressed curly bracket. I go on to the financial sheet where I can see, okay, so it brought me to this EBITDA sheet. Okay, where is this coming from? So this is coming from this. So it just picks up, this is the financial statement, and these are the earnings that I have. So if I want to go back, I would press F5. Sorry, I think I should go back again. So control curly brackets, and if I press F5 and then enter, so I go back to that cell. So this is how the shortcuts are important, and so I'm using just keyboard. So that's very important in the learning part. If your speed is good, you are going to do well in financial markets in Excel at least. Okay, so that's about it from my side. Thank you very much, guys. And now, if you guys have any questions, you can please, you feel free to ask. I can see one question from Ariba. Considering the company we have been assigned is Pakistan Stock Exchange, would assumption related to the company industry basically be the same? Uh, See, Ariba, it all depends on the business model. So you need to analyze what business model PSX has and how what sort of factors are important for the business. For example, I'll just give you an example. Like if I were in your place, I would analyze how profit and loss statement of Pakistan Stocks, yeah, income statement of Pakistan Stocks looks like, and I would analyze what are the main factors driving the revenues. Like one of the revenue streams of Pakistan Stock Exchange I know is PSX Laga, because I worked at a brokerage house. We used to pay to PSX Laga. So when I am forecasting revenues of PSX, I would assume that whatever volumes or value is traded at PSX is PSX gets a chunk of that. So I would have to now assume a certain level of volumes which are traded at stock exchange on a daily basis and on a quarterly basis, and then that all sums up to revenues for PSX. And you need to find out what are the rates of that laga. I think it's 1 paisa, 0.01 percent or 0.015%. So you need to figure that out, what is the number, and that number goes on to uh, what you can say your model as an assumption. That will be a critical assumption on what are the market volumes for that head of revenues. I don't know if that's the only part, because honestly I have not analyzed PSX in detail, but this is one of the areas I know. So this will be one of the assumptions. Another assumption I can think of is, I think they have underlying investments in CDC and NCPL, NCCPL. So it's national clearing, and it's national clearing and CDC, Central Depository Committee of Pakistan, Company of Pakistan. So those two entities also make some revenues which are linked to market. So PSX will get some dividend income or some share of profit from that. PSX also gets some earnings from, I think, listing fees. If I am going to list, so PSX gets that fees. So you need to model those revenues and costs and how salaries are moving for PSX. So this is how you should construct a model. Since okay, so this was question from Ariba. Ariba, I hope I have answered your question. Okay. Uzair has a question. So since PTI tenure will end in 2 years in such scenarios of government changing, how do you forecast for 5 years? Okay. So what do you think will happen, Uzair? First, let me ask you that. When government will change, will that impact PSX in some way, or us, or anyone? So interest rates will change. Yes. So do you think the government change triggers interest rates change, or it's the macro environment change which triggers interest rates change? I personally, so again, so it can be your assumption. So it's the macros which, so it's the other part. I think it's the macros which drive interest rates change. When when whenever there is an election year, governments overspend. They give more stimulus. After that, I'm just sharing what recently has happened over the last two elections. So we don't know what PTI is bringing for us, or this current government will do in the election year. But in the recent past, in the last two elections, governments spent more on in the election year. So to curb that demand, to curb that what you can say incremental demand, state bank, or to control macro environment, central bank has to reduce interest rates. So coming back to this, if my interest rates are going up after the PTI government, so you can put in that assumption in your assumption sheet if you actually believe that they will overspend and you will have macro environment reset and interest rates will increase. So you need to factor in that, you need to incorporate that, and you need to calculate, okay, if will that impact PSX positively or negatively in terms of the revenues they will make, in terms of the overall volumes they have. So this is how I would suggest to go about it. So end of the day, it's the assumption. That's why I said you need to be very clear. So if I think that at the end of 2023 interest rates can go 10%, like I have put in a model, in this model, so I do 10%, and for this company the earnings are increasing. That's also one of the factors where you need to understand that how macro factors are impacting the company, because this company is essentially debt free and they have more cash on the balance sheet. So their income from uh, other income on the cash, or you can say their income on the deposit increases. Okay, Uzair, I have answered your question. Anyone else has any other question? No one has any questions, so I think I would just, utilizing this time, I would just show you how I calculated this revenue of 2022. So this company, I'm assuming that this company made a revenue of 60 billion in 2019. I'm assuming they'll make a revenue of 43.5 billion. How do I do? I do control curly bracket. So it brings me to this part. So this is net revenue. So how do I get it? So F2, when I press F2, I get what are the sources of this. It's 49 billion minus sales tax minus this. So all these taxes are removed, and then I get this. So how do I get this? This is the number. So I'll have $472 a ton PTA price multiplied by, so that's Y51 multiplied by Y17. What is Y17? It's the volume that I expect the company to sell. So Y17 into Y51 divided by 10 to the power 6, since because my model is all in millions, so it gets me to millions. Then I multiplied by Y9. Y9 is the currency that I expect. So what is the currency rate at the end of 2022? So that is the number I get. So, and then I multiply that by 1 plus 14.5% tax and 7% premium that company gets on when they sell. So that all gets me to 49.9 billion. And then I again calculate the sales tax and remove it from the net sales number. Effectively, this is the number I get. So in this year, this company sold, they earned total gross revenue of 67 billion because they sold a little more, and the PTA price was $779. Today it's half, roughly half. So my revenues fall accordingly. So these kind of assumptions are important. How can we get the data of associated companies, NCCPL and CDC? I think PSX discloses data, and more importantly, I think CDC also gives data of private limited companies after you pay some fees. I think it's nominal fees. For this, for specific Salman, for specific to PSX detailed modeling, you should reach out to the mentors that we have assigned you guys. This session is just to explain you how to make, just directionally how financial model is made, to explain the concept, not just to explain on how PSX modeling will happen. I was just giving you examples on what are the important factors that you guys need to work on with your mentors on how to find that. Salman, hope that's okay. Reverse, sorry, I think it will be not be good for me to share the contact details. I think you should reach out to the mentors. Mentors we've assigned are definitely are also professionals like me, and they would definitely help you guys. You guys should reach out to them. In case of any glitch in the coordination, I would advise you guys to email to CFA Society at info@cfapakistan.org. Horena or Umar, whoever is logged in from CFA, kindly post the info ID for everyone to have access to in
Sure,
the chat.
I'll share the research challenges ID. I've been emailing the participants from that email
Okay.
address, so they do have that one, but I'll still post it in the chat box.
Yes, I think so. Follow what Horena has just said. If you guys have any queries, you can just reach out to that. You can just reach out to them and they can help you in assisting. First priority I would advise is to get to your mentors. They are the first saviors you get. Aisha, you've raised your hand, but I assume we have Q&A via chat box only. I would request you to please type your questions in the chat box only. Anyone else has any questions? This is your last window. Rana, I don't think we have any questions. Did you get anything directly? I got some of the questions directly, so I just answered them.
No, I didn't.
So I think we can close the session, right? If we don't have
Sure,
any.
I think we can wait another 2 minutes in case anybody has any questions and they're still
Okay.
typing.
Sure. We can wait. We are waiting then.
Or, if anybody wants to ask a question via audio, then we can let them do that. I mean, if
Yes,
anybody
sure.
has questions and they want to
Aisha
ask
had
through
raised
audio,
Aisha
they
had
can just
raised a
raise their
hand.
hand and I'll unmute them.
Aisha had raised a
Aisha,
hand. I think
I believe we have two Aishas
I
for
don't know.
this
I don't
session.
recall which one.
No.
I don't know. I just saw someone raise a hand. There was this notification which came in. So if he wants to ask, you can unmute her. If
Sure.
Ayub's session is not ended yet. Okay, thank you guys. Thank you very much for your time and having patience. And thank you, Ayub, Miles,
Thank you everyone for
everyone.
attending the session. If you have any questions, you can
Yes, thank you,
definitely
everyone.
email us and we will get back to you. Good luck. Thank you. Bye-bye.
Good luck. Thank you. Good luck for the challenge. Good luck, everyone. Thank you. Bye.